Yeah, I know, and I have tremendous respect for Aswath. I mean, I've read his books. I mean, we all grew up on him, so I mean, it's hard it's a hard one to make a pitch. But I would look at what happened yesterday. I would look at what Affirm is, right? Affirm is a category leader in a disruptive market, right? So what they're doing is they're basically creating an alternative to credit. There's a lot of people who are using it. There's growing demand. You see, they opened it up on Amazon. Everyone's using it, right? Like hundreds of billions of dollars of volume, millions of dollars of volume on Amazon within a month, right? So you're getting people that want to use it. And I think that being the category leader in a fast-growing secular trend is more powerful than the stock is reflecting today.
Tell me about the charge-offs, though, which are rising. This is a new category. A lot of people think it's just being taken advantage of by consumers, and there could be more regulatory crackdown.
So, like we've seen this before, and this is a great point you're making. We did a survey a few months ago, and we actually saw that there's a lot more delinquencies out there. You're seeing that, and the charge-offs as a percent of the loans held for sale are actually creeping up. I think that I would take their word for it that they can actually control this, right? So what they would do is basically, if they see that this is becoming too big of a problem, they would actually restrain the supply, right? Because there's no problem with demand. People will just take the product. They'll restrain the supply, and then the charge-offs will come under control. And one last thing I wanted to say is that you're really seeing that with the with their delinquencies. It's starting to kind of go back downwards, right? So I think that people didn't pay enough attention to it. It went up, and now it's starting to come back down. And I think Max said earlier, it's below 2019 levels. So I think people are panicking maybe too much on Affirm today.
Could you give a final thought if we are in this rising rate environment of one type or another here for the rest of the year? We've seen the impact already that's had on a lot of high valuation tech stocks, but what would you add in terms of the impact on the stocks that you cover, including Affirm?
In terms of stuff that we like in this area?
From higher rates, how should we expect that to continue to play out, both in the actual business models of these companies and also in the way the market treats them?
Yeah, so I think we would, it wouldn't be a secret to say it's very good to focus on names that are actually not, not highly valued. Affirm is a category leader, and we still like it a lot, right? And I think they're going to win at the end. But if you think about names like Fiserv or Fidelity, FIS, right? Those are names, or even WEX, right, which does fuel cards. Those are names that are in deep value territory right now. They are very solid. They're growing, 10%, 11%, 12%, and there's no risk to them. There's no balance sheet risk there. I would own these names like any day.
Very, very interesting. We appreciate that, Dan. Again, Affirm you do think could double from here. Price target of 100. Dan Dolev from Mizuho, thank you for your time.